Hey there, how you doing today? This is Seth, and in this video, I want to show you a really cool new rental property calculator that I just discovered. It's called PropertyREI, and what I like about this calculator is that it takes a process that can be very confusing and complicated, and it just really simplifies it, where you just have to enter a few key numbers and inputs, and then it will give you all kinds of information to help you analyze a deal, and it's really good at drawing your attention to the numbers that really matter in the end. And this can be a really helpful tool for a lot of different people in a lot of different situations. For example, if you are an investor and you're trying to analyze a property and decide if it's a good investment decision before you buy it, this can be used for that. If you're a wholesaler and you're trying to bring a deal to another investor and you're trying to illustrate to them why it might be a good deal that's worth pursuing, or say if you're a real estate agent and you've got a property that you think one of your buyers might want to take a look at, this is another way to show them all the numbers and give them all the information that they're going to need in order to decide whether or not this is a deal that they want to pursue. And as with any rental property calculator like this, the accuracy of your numbers has absolutely everything to do with the accuracy of your assumptions. So where you're getting the data to plug into this is extremely important, because that's going to determine the entire outcome. So with that in mind, it's going to be really important that when you find numbers like the monthly rent revenue and the expenses and the property taxes and the vacancy rate and all of that stuff, don't just listen to what the seller tells you and assume it's the gospel truth, because many times it's not going to be. With every single one of these numbers, you're going to want to go to great lengths to verify and make sure that you're actually looking at accurate, reasonable numbers. And if you're preparing this information for another buyer to look at, say if you're like a realtor or a wholesaler, just make sure that they understand that this is not necessarily any kind of a guarantee. It's just a very detailed calculation based on the best information that you were able to get. So with that said, I'm just going to take a few minutes and bring you through this calculator and show you exactly how it works. And as I think you'll see, it's a really nice tool that puts together some great information, and it can really be used for just about any type of income producing real estate, whether it be, a small single family house or a 500 unit apartment complex. I mean, all of that stuff will work. It's just a matter of following the same process and getting the right information, plug it in here, and it will tell you pretty clearly whether or not it's a deal that you want to pursue. So in this example, I'm going to show you a recent deal I did where I had a small house under contract, and it wasn't something I wanted to buy, but I was able to find another investor and wholesale it to them. So I just took the contract and assigned it to them, and they closed on it. And in that process, I got all the pertinent details and I put it in here, and I was able to find out that it was a pretty solid deal, and I was able to get comfortable with it, and the end buyer was able to get comfortable with it. So this particular property, this was a very small house, just 700 square feet. And this right here, you don't necessarily have to pay attention to it, but sometimes investors like to see the long-term plan of what this property and investment is going to look like over the next 10 years or the next 15, 20, 30 years. This can be helpful if the plan is for you to hold this for a defined period of time and then increase the rent price, watch the appreciation go up, and then resell it for a higher price at the end of that 10 or 15 or 30 years. So if that's something you want to look at, this calculator has the ability to do that as well, which is pretty cool. For this tiny little house we were looking at, the monthly rent revenue that the seller told us was about $750 a month. And I actually ended up verifying that number with my property manager, who confirmed that that was a reasonable number in that area. And I also got the Schedule E of the seller's tax return, so we could see and verify that they actually made that amount per month in the prior tax year. Other monthly income, say if you had like vending machines or coin laundry or something like that, that's the kind of thing you would put here. But again, I'm just going to put 0 because it doesn't apply in this situation. Vacancy rate, I always put in 10%. That's a pretty conservative number in my area, but this could obviously change based on your location and the state of the economy and the real estate market and all that. So, and then the annual increase in rent is 3%, and this doesn't necessarily have to happen in equal increments each year, but it's basically saying that over the course of the time period that we own this property, it's a reasonable assumption to think that we will be able to increase the rent revenue incrementally by 3% each year by the time we get to the end of that. So it's not like that's necessarily happening like clockwork each year, but that's kind of where we're thinking it's going to go. In this example, my buyer actually ended up paying cash for it. So if you're working with a cash buyer, or if you're planning to buy the property yourself with cash and not get any financing, you can click this drop down and pick that, and then all these other variables go away. If we go up here to the property acquisition section, this is where we put the purchase price. In this property, I was able to get under contract for $25,000, and then I also got a $2,500 assignment fee. So the total purchase price for this buyer was $27,500. The closing cost for this project was about $1,500, which is actually about 5.5% of closing costs. But generally speaking, 5% of the purchase price is usually a pretty safe bet in terms of what those closing costs are going to be. So moving on, deferred maintenance costs. This particular property needed a few small things to be done to it, but not a lot. So we just factored in $2,500 just to take care of the immediate, most pressing issues. Then moving on down here to the operating expenses. Whenever I get to this section of my calculations, I always know that this is an area where there's a lot of potential for me to make mistakes and mess things up, which can then skew the entire calculation. So it's very important that with each one of these things, you actually need to verify these numbers and be very, very sure about what you're putting in here. Don't just guess or believe whatever the seller tells you. You need to actually have some educated assumptions that you're working with here. So property taxes, this one was fairly easy because I was able to look up what this property owner had been paying for the property tax bill to the city for the past several years. And I was also able to see the number on the Schedule E of their tax return when I got it. And in the most recent year, they had paid $1,464. And also keep in mind, depending on how much you're paying for this property relative to what the seller paid when they bought it. In most cities and municipalities, whenever you purchase a property, it kind of takes the cap off of what the property taxes are, and it allows the assessor to reassess, and then the treasurer can readjust what those annual property taxes are. So just keep in mind, even though you might be able to find out exactly what they paid in their taxes last year, does not necessarily reflect what you're going to be paying going forward, because if you're paying a lot more for your property, those taxes are probably going to go up, and if you're paying a lot less, then those property taxes could very well go down. So just keep that in mind as you're doing your research and coming up with this number. If you have any inclination as to which direction it's going to go, it's not a bad idea just to round it up or down based on what you think could happen. So moving on to insurance, I was able to get this number pretty quickly just by talking to my insurance agent, but I was also able to see this number in the seller's tax return as well. So in this case, $553 was the number I came up with, so we'll put that in there. And then for utilities, I came up with a number of $900, and that again was based on not only the seller's tax return, but also just some of my experience owning similar properties in the same area. And in my area, it's pretty normal for landlords to pay for the annual water bill, but not the electricity or the gas bill. So that's just kind of where this number came from. And then advertising, I've actually got a property management company, and I pay them a fee every time they place a tenant. And this is on top of the 10% of my gross rents that I pay them every single month. So given that that's already sort of factored into this calculation, which we're going to get to below, I'm going to be leaving this one blank. And then HOA fees, this particular property was not part of an HOA, so that's going to stay at 0 as well. Property management, I got 10% factored in there. Maintenance and repairs, I have 10% factored in there as well. And then annual increase in expenses, I'm just assuming that that's going to be 3%. So if I wanted to change that for any reason, I could easily do that. Okay, now once we've got all those expenses entered in, we can go down here and look at this section where it shows our total purchase cost. So that's showing our purchase price plus the closing costs plus the deferred maintenance cost that we'll have to pay right out of the gate, which comes out to $31,375 in this case, so pretty cheap for a house. And then the effective tax rate that I'm assuming here is just 20%. And again, this number can change a lot based on the actual end buyer and the owner and what their tax rate is. But 20% is pretty much in line with my buyer and myself for that matter. So I'm just going to leave that as is. And then these two things down here generally shouldn't have to change much, if at all. Assuming you're buying a residential structure of some kind, the depreciation term is always going to be 27.5, and the land allocation percentage for depreciation is almost always going to be at 10% or pretty close to that. So you can just leave those as is. And then lastly, when you go up here, you can see just a quick cash flow summary of what this deal is going to look like. There's actually a lot more of this information in the following sheets of this spreadsheet. So let's move on to the next few steps here. This right here is extremely helpful. Say if you ever wanted to get bank financing and you needed to show some projections of what the performance of this property is going to look like. A lot of times real estate investment bankers, when they're doing their analysis, are going to be putting together a lot of this stuff themselves if you don't already have it. So if you've already got your numbers nailed down, this is just a very, very helpful thing to have and just present them and make their process a lot easier. And it's also going to give you a lot more credibility because you're showing that you've actually done your homework and you know what you're doing and you are fully armed with all the information that you need to make a smart investment decision. So moving on to the next step, the executive summary. I really like this part of the calculator because it gives you some really helpful visual aids that I've never really seen in any other calculators like this. And it also just draws your attention to some of the most key crucial details that you're going to want to know before you move forward. For example, net operating income. If you do this deal and if everything comes to pass just like you predicted it would, then that is the amount of money that's going to go in your pocket after expenses at the end of each year. And then the next one over, annual cash flow, that's actually the amount that you are going to keep in your pocket because that's factoring in the taxes you'll have to pay based on this 20% effective tax rate that you listed here in the very beginning. So if you were to change this to say, 30%, that would change your annual cash flow here as well. So if you want to look at the whole picture of reality, including the part that nobody likes to talk about or think about, which is your taxes, that's going to be your most accurate, realistic number. And then the cap rate, that's another thing that a lot of investors and bankers are going to be very interested in knowing. That's your net operating income divided by your purchase price. And then moving on here to the key assumptions and cash flow summary. These are pretty straightforward numbers here, and there's not a lot going on because we're not including financing here. One thing I always like to look at is the cash on cash return. And this number is basically telling you how hard your cash is working for you. So based on how much of your money that you're putting into the deal out of your own pocket, what kind of return are you getting on that? And this number is calculated by taking your annual cash flow and dividing that by the actual dollars you are having to put into this deal to buy it, which in this case comes out to a total of $31,375. So that's where that comes from. If we were doing this deal differently and doing a mortgage on it, say if we were only putting down 20% and had an interest rate of 4% over a term of 30 years, then obviously your cash required to purchase the property would be a lot less at $9,375. And that would change this number substantially to a much higher cash on cash return of 20.7%. So basically, in that case, if you were to get financing, the dollars you're putting into the deal are going to work a lot harder for you because you're leveraging the benefit of other people's money, which is a pretty powerful thing, especially if you're doing it right. However, it's also going to affect your annual cash flow because you've got monthly loan payments you have to make. So it's not necessarily going to give you the highest cash flow, but it is going to make your money work harder, if that makes sense. But again, the beauty of this calculator is you really just have to click a few buttons and it will figure all this stuff out for you and help you get to the answers you're trying to find in a pretty quick and concise way, which I think is just awesome. Moving on to the next section here, the ratio analysis. This is kind of just a review of some of the numbers that we've already seen, along with some new numbers like the gross rent per square foot that you're getting, the operating expense ratio, break-even ratio, stuff that bankers and high-level investors are usually going to want to look at. And if you're ever not clear on what any of these things mean, they've actually got a really nice glossary included as one of the sheets in this calculator as well, where they explain all of that. And there is also a instruction sheet at the very beginning of this where they go through a lot of this stuff as well. So just keep that in mind. If you see anything that just doesn't make sense or seems confusing, they really did a good job of explaining this if you're not sure what the answers are. And then moving on here to the amortization schedule. This does not apply in this deal because, again, this was just a cash purchase. However, if we go back here to the dashboard and change this back to a mortgage, the amortization schedule will basically just lay out for you how much you're going to have to pay in principal, in interest, and in total payments every single year of the life of the loan. And then moving on to the next sheet, the property sale price forecast. This is really just something that you can look at if you are doing that 10-year scenario where your plan is to buy this property, own it for 10 years, increase the rent, watch the appreciation go up over that time frame, and then resell it for a higher price. This just does a really good job of laying out what those numbers are going to look like if that's something you're concerned about. And then again, the next page is this glossary and then that's pretty much it. So this example I'm using here, most properties and houses and duplexes and multifamily properties that you buy are not going to have numbers this small. It's more like adding several zeros to the end of everything here. But regardless of the situation and what kind of property you're looking at, this is just a very, very helpful, straightforward tool where you can plug in the numbers regardless of how big or small the deal is. And it's going to spit out some very, very helpful information that a lot of people are going to be very interested in seeing. And it basically just takes a lot of information that can really honestly get somewhat complicated, and it just greatly simplifies it and draws your attention to the numbers that are most important, that you're really going to care about, and that any investors or bankers or other people involved with the deal are going to care about as well. And another beautiful thing about it is just that it is beautiful. I've worked with other rental property calculators kind of like this before, but I mean, they did not look even close to this well put together, where they show you graphs and charts and all the information in a way that really draws your attention to the parts that matter. And then lastly, as one other little tip to keep in mind, if you ever want to print these off or put them together in a nice package and present these calculations to somebody, all you got to do, if you've got Microsoft Excel like I'm using here, is go up to File and then Save As, and then save the document as a PDF. And once you do that, as you'll see, it's just a really nice looking package of information that just sort of lays everything out for you. And it looks really easy to follow and easy to read. And it's pretty much exactly what you would want to see if you were going to present this to a partner or another investor or an end buyer or a banker or anything like that. It's just as simple as saving it as a PDF or printing it out, and you'll be good to go. So that's pretty much it. I hope you can see just how versatile and helpful this kind of tool can be if you're interested in buying any kind of income producing property. This is the calculator that I'm using for all the new rental property deals that I'm looking at these days, and I've found it to be just really, really helpful and easy to use and easy to follow. So if you are interested in getting a copy of this calculator for yourself, I'm going to have a link below this video to the PropertyREI website, where you can go, and it should look something like this. It's just a little sales page with a short video, explains how it works and all that stuff. But if you want to pull the trigger, all you got to do is click on Buy Now. And I actually have a way for you to save a little bit of money. All you got to do is scroll down here to where it says Buy REI Now and click on this. And then you'll see this kind of box pop up here. And you can click right here where it says have a promo code. Click that, and then put RE Tipster and then the number 1 in there. And once you do that and hit enter, you'll notice that the price down here drops down to $42.30 from $47. So you just save yourself a quick 10%. Why not, right? I do have an affiliate relationship with PropertyREI because I think it's a great product and I use it all the time. So I will get a small cut of that if you decide to purchase it. And if not, if you've got some other way to evaluate your deals, and I wish you all the best with however you're currently analyzing your information. So either way, I thought PropertyREI was awesome. I think you'll probably feel the same way if you decide to go with it. But yeah, that's pretty much all there is to it. So thanks again for watching, and I wish you all the best with your next rental property.